Good morning, everyone. Thank you so much for joining us. I do have a team with me. Deputy of Residential Finance, Mike Garvin, is with me today, and he'll be ready to answer any questions you have during the presentation in the chat, and he will be available afterwards for questions as well. And I do have some bank CRA examiners that will also be ready to answer any questions you may have in the chat. So thank you, team, for joining. At the top, I do want to provide the disclaimer that the information and views shared in this presentation are my own and do not represent those of the Illinois Department of Financial and Professional Regulation. The information contained in this presentation should not be construed as legal advice or as a formal interpretation of the Illinois Community Reinvestment Act or rules. In today's agenda, we will provide an overview of the Illinois CRA, the scope of the Illinois Mortgage CRA, assessment factors, performance tests, standards, and ratings, lending tests, service tests, assigned ratings, data collection, reporting, and disclosure, content and availability of public information, public notice, publication of planned examination schedule, examination authority and cooperation, exam frequency and coordination, exam fees, the effect of Illinois CRA performance on applications, performance evaluation format, examples of community development and investments, a regulatory staff update, and we will conclude with the Q&A. So the CRA includes coverage of other financial institutions, including credit unions and non-depository mortgage lenders and banks, as you know. So there's three parts of the Illinois CRA. Today, we will be covering the non-depository mortgage lenders' impact on CRA or effect on CRA. The implementation timeline, rules went into effect on May 1st, 2024, and this was followed by nearly a year and a half of discussions, public hearings, and formal comments by industry and the public. The implementation period for mortgage licensees, there's two buckets. For 100 or more loans, it was February 1st, 2025, and for under 100 loans, it will be November 1st, 2025. The scope of mortgage CRA, there's community investment and performance evaluation. Community investment applies to mortgage lenders, ensuring mortgage credit availability in the state, particularly in low and moderate income neighborhoods, and focuses on maintaining safe and sound lending practices while meeting community credit needs. On performance evaluation, it involves assessing the mortgage lender's record in meeting the state's mortgage credit needs, evaluates activities such as underwriting, making credit decisions, and issuing commitments for home mortgage loans. Assessment factors. Under the Illinois rules, there are 9 factors that IDFPR is required to consider in assessing a covered financial institution's compliance with the Illinois CRA. Number 1, activities to ascertain the financial services needs of the community, including communication with community members regarding the financial services provided. Number 2, extent of marketing to make members of the community aware of the financial services offered. Number 3, origination of mortgage loans, including but not limited to home improvement and rehabilitation loans, and other efforts to assist existing low-income and moderate-income residents to be able to remain in affordable housing in their neighborhoods. Number 4, origination of small loans to businesses with gross annual revenues of $1 million or less, particularly those in low-income and moderate-income neighborhoods. Number 5, participation, including investments in community development and redevelopment programs, small business technical assistance programs, minority-owned depository institutions, community development financial institutions, and mutually owned financial institutions. 6, efforts working with delinquent customers to facilitate a resolution of the delinquency. 7, origination of loans that show an under-concentration and a systemic pattern of lending in the loss of affordable housing units. 8, evidence of discriminatory and prohibited practices. And 9, offering mortgage lending to unbanked and underbanked persons. Then there's the performance test standards and ratings. The performance tests and standards exam includes applying assessment factors and conducting lending and service tests as outlined in sections 1055.220 and 1055.230. The performance context, the assessment is contextualized using a range of data, including demographic information on median income levels, housing stock and costs, lending and service opportunities data from community organizations and local governments, licensees' product offerings and business strategy, capacity and constraints, and past performance, including comparisons with similar lenders, are reviewed. Assigned ratings. Ratings are assigned based on the overall assessment of the licensee's performance. The possible ratings are outstanding, satisfactory, needs to improve, and substantial noncompliance. Outstanding represents excellent performance in meeting credit needs and community investment. Satisfactory is meeting required standards. Needs to improve, it's below satisfactory levels. And substantial noncompliance, it's for significant deficiencies in meeting credit needs. Safe and sound operations. This part does not mandate loans or investments that compromise safe and sound operations. Licensees are expected to adhere to safe and sound practices while meeting the standards. They are encouraged to develop flexible underwriting standards that benefit low and moderate income areas, provided these standards remain safe and sound. Lending test 1055-220, these numbers correspond to the rules, just for your awareness. You can flip to this section for everything that I'm covering. So under the lending test, we will assess mortgage licensees' records in meeting state mortgage credit needs through its lending activities, originations, and initial purchases reported under HMDA, home mortgage loans in various income geographies, distribution by borrower characteristics, innovative practices for low, moderate income individuals, special purpose credit programs, federal, state, nonprofit, and special purpose, loss mitigation efforts, fair lending, loss of affordable housing units, and third-party lending. We have had questions with regards to this, and to answer that, on loan churn, if an entity wishes to receive Illinois CRA credit, it should make sure its loan originations and purchases adhere to the requirements of 38 IAC 1055.220A2 and C, in addition to federal CRA requirements. Moving on to surface tests. We will evaluate covered mortgage licensees' effectiveness in meeting the state's mortgage credit needs. Licensees with less than 200 home mortgage loans in the last calendar year are exempt. Must benefit the state or broader regional area that includes the state, innovativeness and responsiveness, availability or effectiveness of delivery systems for low to moderate income geographies, and range of services tailored to various income geographies. In Section C, it states that the effective evidence of discriminatory or other illegal credit practices, and this is with regards to assigned ratings, includes citations to Illinois as well as federal anti-discrimination laws, includes as an example of an EQA or Fair Housing Act violation, relying on or giving force or effect to discriminatory appraisals to deny loan applications where the covered financial institution knew or should have known of the discrimination. This is not a new standard. It restates federal law as confirmed by the Consumer Financial Protection Bureau. Data collection, reporting, and disclosure. Mandatory data collection reporting includes covered mortgage licensees, and they shall be required to collect and report for examination purposes the data fields required under HMDA. Test its data collection and reporting as part of its routine internal controls to ensure compliance with all data reporting requirements as well as its own policies and procedures. Under optional data collection and reporting, covered mortgage licensees may, at their discretion, provide additional information about their lending performance, including additional loan distribution data. Content and availability of public information. The information should be made available, it will be made available, public comments, public section of performance evaluation, and HMDA disclosure statement. This is all information that we will make public on our website. Provision of copies. Upon request, covered mortgage licensees must provide copies of the required information within 5 business days. These copies can be provided on paper or in another acceptable format with a reasonable fee allowed for copying and mailing costs. There is a public notice. You can find this in Appendix B on the IDFPR website. There are links to this, but just for your awareness, we do have a web page specifically for Illinois CRA, and you can find all of this information on our webpage under Division of Banking and particularly for mortgage licensees. The notice that you are required to publicly display on your lobby is available on Appendix B, also in the rule. You must display this in your main office and additional full-service offices. We also expect that you will post this notice on your company's website. Publication of planned examination schedule. IDFPR will publish a list of covered mortgage licensees scheduled for Illinois CRA exams at least 30 days before the start of each calendar quarter. We are currently doing this on the banks and the credit unions, and we will also do that for the mortgage licensees once we're ready to perform an exam. If you're wondering when communications will be sent out to you, please know that we will be reaching out directly to you significantly, well, more than 30 days before we even post this on our website, so that you are aware of your upcoming exam. I do have a link here as well to visit the IDSPR webpage where we will publish the exam schedule, and also there is a separate area where we will publish the evaluation. Examination authority and cooperation. IDSPR can examine the full range of books, records, documents, and operations of covered mortgage licensees, including those of their directors, employees, and agents. Cooperation requirements. Covered mortgage licensees must promptly and fully provide books, records, and documents in any reasonable format requested by the department. Licensees must ensure that all officers, directors, employees, and agents are available for depositions or interviews with reasonable notice. We will conduct examinations in coordination with authorities from other states who regulate home mortgage loans. The examination schedule, as you can see in the table, licensees with 100 or more home mortgage loans will be examined based on the rating received in the most recent prior exam under Illinois CRA, every 3 years for outstanding and satisfactory rated institutions, every 2 years for those with the rating of needs to improve, and every year for those with the rating of substantial noncompliance. For the most recent prior exam under Illinois CRA, if you're asking what that is, it is interpreted as the most recent examination by another state's regulator under the state's Community Reinvestment Act. Licensees with fewer than 100 home mortgage loans, it's also based on rating received in the most recent prior examination under Illinois CRA. Every 5 years for outstanding rated institutions, 4 years for satisfactory rated institutions, every 2 years for those with needs to improve, and every year for those with substantial noncompliance. Continuing on, reporting requirements. Report the number of home mortgage loans made during the last calendar year on the mortgage call report. Okay, on to examination fees. The fiscal year 2026 fee will be due on July 31st. This is an annual fee due within 30 days after the start of each fiscal year, which is July 31st. Your fee is based upon the number of Illinois mortgage loans as shown by the mortgage call report for the previous calendar quarter. Out-of-state expenses that you will cover will be to reimburse the department for all travel costs, which includes airfare, hotel, and per diem. With regards to compliance, you must adhere to we will adhere to travel regulations set by the Department of Central Management Services and the Governor's Travel Control Board. A copy of the fee schedule is included here. It's also available in the rules. As you can see, your fee will be dependent on the number of mortgage loans. The smaller your mortgage company is, the less you will pay. And there's how many buckets? Several buckets here. I've only posted the fee for 2026. We will have to go back to include the fee schedule for future years. We do not have that at this moment. The effect of record or performance on applications. IDFPR evaluates performance records of mortgage licensees when submitting applications such as license renewal, office establishment or renewals, mergers, and acquisitions. We will consider views from interested parties on licensee performance. The performance records can result in denial, deferral, or conditional approval of applications. And financial safety, soundness, and other policy considerations may also influence application decisions. So with regards to the performance evaluation format, we do not have, as we have not conducted any exams, we do not have the format to share with you at this moment, but we have performed 3, and I believe we're just finishing up the 4th bank exam. Our team has been working really hard on the bank CRA. There is one evaluation that we have posted already on our website. You're welcome to check it out. The format for the mortgage performance evaluation will be very similar to the bank performance evaluation. So we provided some examples on qualified community development and loans and investments. This is something that was asked of us. This information or some of these examples are examples that we did that are currently being utilized by the OCC, for instance. So for qualified community development loans and investments, the purpose is to support community development, such as affordable housing or essential community facilities. And some examples include loans to nonprofits serving LMI needs, financing for the construction, rehabilitation of community facilities and LMI geography, loans to financial intermediaries that promote community development, such as CDFIs, NMTC, New Market Tax Credits, and CDEs, financing for renewable energy or environmental cleanup in LMI areas. On community development services and technical assistance, the purpose is to enhance access to financial services and support community development organizations in low to moderate income communities through expertise and resources. And some examples include providing services through branches located in LMI areas, implementing foreclosure prevention programs for LMI homeowners. And then some technical assistance examples, serving on boards or loan committees, developing financial service marketing and loan application standards, offering training in financial services, accounting, or fundraising, and assisting in legal, IT, and HR services. An update on our staffing. We currently have 5 bank examiners and 4 bank examiners and 1 trainee. We are in the process of onboarding 1 mortgage examiner, hopefully before the fiscal year end. And we are interviewing another mortgage CRA examiner, so I'm hopeful to have 2 to start training and then be ready for exams. I don't believe we'll be able to do anything in the 3rd quarter. 4th quarter is more likely. It just depends on how much this individual or these individuals know about CRA. And then with regards to credit unions, these are under the Division of Financial Institutions. They have their own CRA supervisor and 1 examiner. And this concludes today's presentation.